Good evening everyone. Today we are discussing the EURUSD. EURUSD extended its recovery, surging past 1.17 levels for the third consecutive day. This was driven by the weakening US dollar, influenced by global trade concerns, threats to Fed independence and lower US bond yields. The US dollar index fell to a 2-week low, boosting the euro further. Now let's discuss the impact of trade tensions on USD. US trade tensions are a major factor behind the dollar's decline. Key tariffs being considered include 30% tariff on European goods, 25% on Japanese and South Korean imports, and a 50% surcharge on copper. Brussels is preparing a countermeasures, and President Trump has warned of retaliatory actions against Europe. These escalating concerns weigh heavily on the dollar. The divergence between Fed and ECB's policy. Now let's discuss that. The Fed and ECB are taking contrasting approaches. The Fed is divided on rate cuts, with some preferring patience while others call for immediate action. Despite rising consumer prices, modest easing is expected later this year. The ECB lowered its deposit rate to 2% in June and is awaiting signs of weak external demand before considering further stimulus. The CFTC data shows growing optimism for the euro, with a long position reaching 128.2 thousand contracts, highest since December 2023. However, commercial players are more cautious, with net short position rising to 184,000 contracts. Open interest in euro futures has been climbing, reaching its highest level since March 2023. Euro USD recent rally is supported by a weaker dollar, trade concerns, and a cautious Fed. Meanwhile, the ECB remains on a hold, waiting for clearer signals. Speculative bets on the euro are rising, but commercial players remain cautious. Stay alert to trade and policy developments as they will shape the euro's future. That's all for this quick update. Follow us for more such updates.